Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, in part one of a three-part series, Paul speaks with Alan Scharfstein, president and founder of the DAK Group, a 30-year-old middle market investment banking firm, about the needs and prospects of middle market owners considering a sale or recapitalization.
So I guess to start out with, could you tell us a little bit about the DAK Group? I mean, you've had a pretty interesting career yourself, and tell us sort of how you got into that and how the DAK Group came about.
Well, as you know, the DAK Group is a middle market investment banking firm that was founded about 30 years ago, and it was founded on the premise that there were many great investment banks working for large companies. But when you were in the middle market, it was often very difficult to find an investment bank that understood mid-market businesses, focused on them, and gave them the appropriate level of attention. So it was about 30 years ago that we started the DAK Group, and here we are probably 600 transactions later, addressing that same need of trying to say, can we provide high-level service to mid-market companies? I was an executive at several packaging companies prior to founding DAK, and at one point in my career decided that the appropriate thing to do would be to go out and become CEO of a company that I could own. Became very frustrated with the process of trying to find an investment bank that knew and understood the middle market, knew and understood the packaging industry. And as a result of that, sometime back in 1984, I founded DAK.
And so you made the point that you had a hard time getting an investment bank to actually understand the middle market. Again, that was sort of early to mid-'80s. Given the certainly recent focus on the middle market, is that still the truth, or has there been sort of a reaction from the marketplace that says, hey, these middle market companies are pretty important?
I think that the middle market is still significantly underserved. What we see is that some of the larger investment banks want to move into the middle market when their businesses are slow on the larger transactions. You also find that with many of them that the professionals staffing the middle market transactions, what is in their case their smaller transactions, are often the younger professionals who don't have the experience that one would want managing a transaction. So we still see there as being a significant opportunity and a significant gap there in the middle market to serve it and to provide very high quality service.
Right. You know, we've and I ask this to so many people, and frankly, I'm getting tired of asking it. I'm sure tired of people hearing the answer, but nothing seems to change. We've heard for a while now from some of the larger organizations, the Deloittes of the world, who have been predicting for some time now I guess what I would call a wave of M&A activity in the middle market, given the almost ideal conditions in terms of the credit markets, interest rates, all the money sitting on the sideline waiting to be deployed, and the aging of the owners, all those baby boomers that own companies, that there's this perfect wave coming for a middle market M&A, but it just doesn't seem to have happened yet. What are your thoughts on that? I mean, what have you seen? Is that coming? Are we in the middle of it and just doing the due diligence part of that, or what do you think?
Oh, I think we're very much in the middle of it. If we take a look at what we see as our pipeline and the transactions that are in process, we see that activity moving forward at really a torrid level, and I think there are a couple of reasons for that. Some of which you already discussed, but one is we see that strategic buyers are very active in this market. And the reason that they are so active in this market is because it's really difficult for strategics who are promising their shareholders growth to grow in a market where the underlying business market is not growing at a rapid rate, and therefore organic growth is difficult, and acquisition growth has become very attractive. Combine that with the private equity firms who have significant dollars sitting on the sidelines looking for attractive opportunities. And then even combined with that, the fact that foreign buyers are actively looking at the U.S. market. And we see that most specifically coming from the Eurozone, where there are conditions that say that they would like to deploy their dollars overseas, specifically to the U.S., which is a relatively safe, very quickly recovering economy, and the dollar is still essentially weak. So the U.S. businesses are in fact on sale. The other thing that I think is very interesting in terms of a trend that we see going on in the market is you mentioned the fact that many of the baby boomers are aging, and that's causing some people to want to sell their businesses. But what we're also seeing is that business owners are in fact selling their businesses at younger and younger ages, so that our typical client is no longer the aging baby boomer who is looking to retire, but rather an owner often in their 40s or 50s who are looking for opportunities to hedge their bets, to take some money off the table, and perhaps become a serial entrepreneur and do this more than once.
Be sure and check back tomorrow for part 2 of our series. Thanks for listening.